How's it going, everyone? Glad you guys all made it. Today we have STRATalorian with us to talk about some psychology and best practices. So I will let him do a little self-introduction and then we'll go ahead and get started.
Hello, everyone. Peace and blessings on all of you. Welcome. I appreciate T-Trades for getting me out on this session. I'm really looking forward to sharing some information, some knowledge that I've gained over the years, and I'm definitely pumped for this session. So we'll just go ahead and get started. So a little bit about myself. I've been around for quite some time. So I actually work in the industry. I started my career as an investment specialist working for a boutique firm in the Toronto Stock Exchange building. So, I was a licensed financial advisor. I've been an active trader since the early 2000s. I worked in the industry throughout the financial crisis, its fallout, etc. I've got a list of designations. I've got the CFP, a CMT, a fellowship, and a couple other ones there, but they're not that important. Honestly, it makes me seem a lot smarter than, than I really am. If I can do it, anybody can do it. I've also been teaching at a college for over a decade, working on training future financial advisors and aspiring CFP designation candidates. So I've been around for a while. I'm also a mentor with the CMT Investment Challenge. I've held a wide variety of positions in the industry. I currently now have transitioned into a head office position, so I'm no longer a licensed financial advisor, but I do work for corporate head office at one of the world's largest financial institutions. And so right now I do high net worth financial planning for high net worth clients, doctors, lawyers, executives, professional athletes. I even did a financial plan for an astronaut once, as I was telling T-Trades before we started. So that was kind of cool. Helped a lot of families build, preserve, transfer real generational wealth, taught hundreds of students to do the same. And I'm currently over at STRATading doing one-on-one consultations for clients who are looking for a more hands-on approach to their trading journey. So I know many of you are here because you want to have a lot of questions answered. So I actually have a couple of questions for the audience. Many of us want to be traders. So the first thing that you actually want to establish is why you want to be a trader. Is it just to make more money? Is it to have freedom? Quit your job? Is it prestige? So what I'd suggest is, just as a simple exercise, write down your why. It could be on a piece of paper. You could type it out on your computer. It's just the first step. And it's important to remember that a journey of 1,000 miles starts with that first step. So if you want to be a trader, it is something that you're going to have to put time and effort into. Okay. I do know that a lot of people had submitted questions, so I've actually prepared some slides with some of the answers that I have. So if I haven't answered your question by the end, please feel free to type it into the chat and I will do my best to answer it. So here's a question for you. Okay. I know many of us look at money in different ways, but let's say you find $100 on the ground. Let's say you get a $100 check from a dividend paying stock that you own. Let's say your sweet grandmother sends you $100 for your birthday. You sell some old Pokemon cards. You work and get paid $100. What's the difference? When you go to the store to spend that $100, right, or $100 less taxes, does it matter how you made it? And this is something that I really want people to focus on because many of us get caught up in trying to make money a certain way. When it comes to the financial markets, there's so many different ways to make money, right? So no matter how you make money in the markets, it's still just money. So if you're selling a covered call, you buy a penny stock and you flip it. You sell a put credit spread. You buy a call option. You sell naked options. Don't ever do that. That's not a good idea. You trade futures. It really doesn't matter, right? So what's the point? There are a lot of professional traders out there that will actually only trade one setup. Some of them will only trade one stock. Some will only do covered calls. Some will only do credit spreads. Some will only do debit spreads. Some will simply just trade futures, options, Forex, options on futures. Like there are so many different ways to make money. So my first point, and message to the audience is do what you're comfortable with and what you're best at. And don't worry about all of the hundreds of different systems and indicators out there. There's a lot of really good ones, but always do what's best for you and your account. If trading a certain style or a certain system doesn't work for you, then don't do it. It's really just that simple. Do what is best for you and your accounts. Okay. So, a lot of questions came in about overcoming psychological issues. And I can tell you this, trading is only maybe 10% technical, right? Maybe 20%. But, it's not a huge portion of it. The real thing or the real part that we need to know and understand is that trading is like 90% psychological, right? The psychology of it, the risk management, the trade management. And it could actually take you years for you to learn how to get yourself out of your own way. And this is something that I really want to focus on, right? Because ultimately, I know many of us think that, the market makers are out to get us. The market is, out to get me. They're hunting my stops. They're manipulating the markets. And sure, a lot of that could be true. But at the end of the day, we have to be aware and accept responsibility for our own trades. Okay. Now, you can start off paper trading. It can be great for learning a system or trying some ideas, but until you actually have real skin in the game, paper trading is just a learning tool. Okay. Because until you trade real money, you're not going to feel what it's like to trade real money. And I know that a lot of questions came in about how do I grow my account? How do I, trade bigger size? The first thing that I want to tell everybody out there is start with a small account. Okay. A $500 account, a $1,000 account, earn the right to trade bigger size. And that's something that my mentor had taught me over the years. And, just because you've got 25K, 50K, 100K, 200K, whatever it is, doesn't mean that you should start trading with that amount, especially if you're new. I've worked with a lot of people over the years, people who I do one-on-one consultations with who come to me, and by the time they get to me, they've already lost a lot of money. And so one of the first things that we start to do is I just tell them, hey, you know what? Start with $1,000 account. Simplify things. If just because you have 25K doesn't mean you have to trade 25K. Start with a smaller account, earn the right to trade bigger, right? If you're in a trade and you're panicking, you have way too much size on. So just reduce your size down to a comfortable level, you know? Don't overcomplicate things. The easier and more simple you try and keep things, the easier you will find trading can become. It never becomes easy, it becomes easier, right? You don't need 15 indicators on your chart. Believe me, when I did my CMT, and I see other people, students, etc., they'll have all these indicators on their chart. And you don't need 6 indicators, 8 indicators, 12 indicators, because you end up getting analysis paralysis, right? You don't know which indicator is actually telling you what you should be doing. Because remember, a lot of them are lagging. They're all based on things like price, volume, and time, or a combination thereof. But you could, if you really wanted, come up with a thesis, say, okay, I'm bullish for whatever reason. And you could come up with a bunch of indicators that actually support your thesis. But that's not how we want to trade, right? We want to try and simplify things. And I'm always, always, always telling people out there, find what works best for you, what works best for your trading style, your personality, your schedule, your account size, etc. Okay. If you think that you want to be a swing trader, then try out swing trading. If you think that you might want to be a day trader, then try that out. But always try and be honest with yourself and be realistic with your trading goals. Okay. It is possible to become a profitable trader. Some people can do it in a few months. Some people can do it in a few years. Some people never get it, right? That's just the reality of it. Not everybody makes it to the NHL. Not everybody makes it to the NBA. And while I believe that every single person out there has the potential to become a good trader, the reality is that, when you look at the stats, more than 80% of traders fail. Now, the question is, why do they fail? Do they fail because they don't have enough screens? Do they fail because they don't have enough money? Or do they really just fail because they can't get themselves out of their own way? So let's talk about, you know, how to actually improve. This is from a book that I highly recommend. I've got the name of the author. It's actually called Atomic Habits by James Clear. And it's a fantastic book. It doesn't actually relate to trading, but when you read it, you will see how much it actually ties into what we do as traders. And really, all we want to do is try and improve ourselves. Even if you improve yourself 1% every day, right? The Navy SEALs, they talk about 1% better every day. Over a year, you could actually be almost 38 times better. But you have to show up every day and put in that work every day, right? So, what are one of the most common problems that I find that traders have? And it's not having a trading plan, right? And what this really means is that we as traders, when we don't have a plan in place, it's because we think that we know more than the market and that we will actually be right no matter what we do with our trade. That's a very dangerous way to approach the markets, right? If you wanted to drive somewhere, you're not just going to hop in your car and start driving. You're not going to, you're going to use GPS or, a map, but you're not just going to start driving. If you want to go from, New York to Los Angeles, you're not just going to hop on the highway and figure out, okay, I'm going to get there. You're going to have a plan. You need to do the same thing with your trading, right? Because not having a plan really just means that you think you know what the market's going to do, and that's why you've taken this trade. But we don't know what the market's going to do. We never know what the market's going to do, right? Another thing that I'm always going to highly recommend, and if you are struggling with your trading, right, there's not a lot of guarantees that you can make, right? But I can guarantee you that if you review your trades, then you can improve as a trader, right? So by not reviewing your trades, it means that you're not wanting to accept responsibility of your trading outcomes. You're not wanting to put in the work that's involved to improve your trading results. And that means that you're just not serious enough about trading success, right? So what I suggest is every time you take a trade, you should, of course, have a trading plan. You know why you're getting in, why you're getting out, where your stop is, how much you're risking per trade, etc. But then go back and review that trade. Because when you review that trade, you will know where you went wrong if you went wrong or how you can improve, right? So you have to realize that there's work involved. If you think about a plane, right? A plane needs to constantly adjust its course. So a small deviation off of the flight path is easily corrected, right? So your trade journal is like your flight path. Now, if you've been flying in the wrong direction, it's going to take some time to get back on track. So if you're not tracking your trades right now, if you're not reviewing your trades, if you're not doing a trade journal, you need to start doing those things. Okay, because if you're not putting in that time and that effort, it's going to be very difficult to sustain yourself as a trader and be successful long term. Okay. This is from Mark Douglas's book, Trading in the Zone. And if you haven't read Trading in the Zone, it's an absolute must read for any trader out there. Okay. And so there are the 5 fundamental truths of trading. And one of the most important ones that I want people to know is that anything can happen. I've been in the markets for a long time and I've seen a lot of things. And just because you think that the market's going to do this doesn't mean it's going to do this, because, the reality is, and you can read these for yourself, you don't need to know what's going to happen next to make money, right? There's a random distribution between wins and losses for any given set of variables that define an edge. An edge is just, higher probability of one thing happening versus another. And number 5, every moment in the market is unique, which means that what happened on Friday afternoon and what's going to happen tomorrow and what's going to happen next week, next month, next year, it's never going to be the same because there are going to be different people involved in the markets. There are going to be an infinite number of variables that will change so long as the market is open. People participating, people no longer participating. And so the 7 principles of consistency are very important. I've got them here. You can take a screenshot. Objectively identifying your edges, predefining the risk of every trade, accepting the risk or be willing to let go of the trade. That's a big one. Acting on your edges without reservations or hesitations, paying yourself as the market makes money available to you. This is one thing that I can tell you for myself when I started to do it really changed the way I approached my trading. Because when you start to pay yourself, it becomes real money, right? For many of us right now, if you've never actually taken money out of your account and spent it on, it could be a trip, it could be a coffee mug to keep on your desk, it could be your kid's tuition, it could be whatever, right? It just feels like numbers on a screen. It feels like a video game sometimes. But when you take that money out, it actually becomes real and you can feel it and you can use it for stuff. That changes the way you approach your trading. Continually monitor your susceptibility for making errors. This is why you need to have a trading plan. Okay, if you don't have a trading plan, you need to have one. If you're taking trades without knowing why you're taking trades, that's going to be a problem. And that's something that you can very easily rectify if you put in a little bit of time and effort, right? And then, of course, the last one, understand the absolute necessity of these principles of consistent success and therefore try to never violate them. And so again, Mark Douglas, 95% of the trading errors you're likely to make will stem from your attitudes about being wrong, losing money, missing out, and leaving money on the table. Okay? And we'll talk about these here in a little bit as I go through and answer the questions. So one person had asked about recognizing tilt as it's starting. One of the most important things that we need to be aware of as traders is becoming euphoric, right? You have a big win or you have a series of wins and now you start to feel invincible, right? One thing that my mentor had taught me is that euphoria is worse than the fear, right? Because if you trade scared, you're going to at least do something to try and protect yourself, right? That fight or flight response kicks in. But when you feel euphoria, you feel like you've conquered the market, you've solved the market, you know exactly what the market's going to do. And that's usually when you put on a position size that's way too big for you or your account, and then the market will humble you, right? So it's important to have something in place to keep yourself grounded and humbled. The market will always humble you when you're at your highest level of euphoria because that's when you are the most reckless. So taking some time away from trading, even if it's a day, even if it's a week, it will help those emotions to settle, right? I also recommend withdrawing funds from your account and paying yourself because say you're comfortable trading with a $25,000 account and you're able to grow it to a $50,000 account, but you're only used to trading a $25,000 account. For some people, sizing up can be a challenge. And we need to learn to recognize when these things are starting to happen. And so one common thing to do is if you grow your account, take that money out of your account. Even if you transfer it to just another bank account or another trading account, you you can have a $50,000 account or you can have two $25,000 accounts. It's still the same amount of money. But in your mind, you can see two $25,000 accounts and you can trade them at the level that you've been comfortable with. Because if you start trying to trade a $50,000 account, you're probably taking some bigger position sizes that maybe you're not ready for. And this can cause problems down the road, especially if you take a large loss, right? And then you see yourself back at, back to 25,000, for example. and it can cause you, trader PTSD. You might have heard of that saying before. It's actually a real thing, right? I talk to a lot of traders who, because of the losses that they've taken over time, become, affected by what they've gone through. And so working through a lot of these issues does take time. And it's always important to try and set things or put things in place in such a way that you recognize when you're starting to become euphoric or when you're on, a path where you're starting to revenge trade. Because getting yourself out of your own way is one of the best things that you can do for yourself as a trader. So somebody else here had asked, how good is the strategy of set in, forget it, right? And so this is a bit of a loaded question. It depends specifically on what the individual was asking. If it's something like a retirement account where your time horizon is 30 to 40 years versus, are you scalping futures? So, if you're if you can automate your trades, then that's fine because it takes the emotion out of when to get in, when to get out, right? So if you set a bracket order, for example, I know many of the listeners are futures traders, right? So if you set a bracket order, where's your entry, where's your stop, where's your profit target, and then let the market do what it's going to do, that's fine, but it's very important to keep an eye on your trades. Just because you have a stop loss in place doesn't mean that it's guaranteed to be filled, especially if the market moves quickly in one direction or another. Okay. At the end of the day, we as traders are ultimately responsible for our accounts and our trading results. And that means that you have to keep an eye on your trades. If you can automate them, great, but that doesn't mean that you just walk away and let it do what it's going to do, because you can find yourself in a situation where the market goes against you, your stop doesn't fill, and now you're taking a much larger loss than you had anticipated. I know because it's happened to me. Years ago, I had a trade. I was in some Amazon contracts. I was in, fairly large size, and I had set my stop order, and I went back to, working, and I checked a while later, and Amazon was below the spot where my trade should have been stopped out, and it wasn't. And so as it turned out, because I had a really deep in the money call, my order never triggered and became a market order. And the long and short of it is they apologized to me and they offered me like, I don't know, 100 free trades or something. But I ended up taking a loss that I really shouldn't have, because even though I did everything right by setting my stop, the stop order never triggered. And that is my responsibility. I put that trade size on. I should have kept a closer eye on it. And if I knew that I couldn't keep a close eye on it, then I should have either reduced my position size or exited the trade altogether. So one really important thing to remember is that if we want to take responsibility and, accept and praise ourselves when we trade well, we also have to accept responsibility for when we take losses. Okay, so setting it and forgetting it could work, but remember at the end of the day, it's important to keep an eye on your trades. Right now, how to scale up. So it's important to earn the right to trade big. So scaling up can be very difficult for some. My suggestion is to do it slowly, because trading is like lifting weights. If you try and bench 250 pounds when you're fresh off the street and you've never lifted, you're probably going to seriously hurt yourself. Now, the same thing applies with trading. So if you're trading, say, one NQ contract and you want to start scaling up, then instead of trading, two contracts, consider trying to trade, micros, and scale up using micros until you get to the point where you can trade the equivalent of two NQ contracts. But at least this way, you're working your way up to it. And so it helps you to incrementally increase your size, and getting used to that can sometimes take time. Trife, I do see your comment here. I do not primarily trade ICT. I trade a few different systems. One of them is the TTM squeeze system by John Carter. I also trade reversion to the mean. So, looking at being overextended plus 3 ATR, looking for it to come back to say the 21 EMA. And I also trade something called the Strat. I am familiar with some ICT concepts, but I definitely have to watch, some of T-Trade's videos to learn a little bit more about ICT. So hopefully that answers your question. So how to keep focus when you're in a drawdown? With trading, many of us think about the next trade. We need to instead think of the next 10, 100, even 1,000 trades. Because when we start thinking about the next 1,000 trades, the next trade becomes irrelevant, right? Your next trade should not make or break your account. It's a series of trades. And one thing that's very important is that we need to expect to take losses. Now, I'm not saying that we go into a trade saying this trade is going to be a loser, because if you know that it's going to be a loser, or you anticipate it's going to be a loser, why would you take the trade, right? But over 1,000 trades, it's almost a statistical certainty that you will lose 5 to 10 trades in a row. And so the most important thing to do, first and foremost, is to manage your risk. So tracking your trades and journaling is very important. It's the work that you put in outside of trading hours that will really make the difference for you in the long run. Okay? Remember that anything can happen and the market doesn't give a damn what you think. This is literally a picture that I took this afternoon. I've got this posted on my whiteboard beside my desk. And I kept that there years ago, as you can tell from the condition of the paper. I intentionally have it there because I have to constantly remind myself that the market doesn't care what I think. The market doesn't care about my opinion. The market doesn't care whether I think it's going to go up or I think it's going to go down. The market is going to do what the market is going to do. And the market is always right. Okay? So it's very important for us to not put in our personal biases on what we think about the markets, right? So, the market could go up next week. It could go down next week. I really don't know. Anybody who says the market's going to go up or the market's going to go down, you got to be careful with that, because the market is going to do what the market's going to do. I've seen the market go limit up. I've seen the market go limit down. I've seen some of the craziest things that have happened over the years. I've experienced that. I've seen the market go down like 13 days in a row back in, I think it was like 2013 or something. And so when we have our analysis and we look at what we think the market is going to do based on what we see, that's fine. But when we let our opinions, because, I'll give you an example. I was talking to T-Trades before, and we both feel that there is the possibility that the markets could revisit the COVID lows. Now, does that mean that's going to happen? Could it happen next month? Could it happen next year? Could it happen never? We don't know. All we do is base ourselves on what we actually see happening in the markets right now. Because if you think that the market's going to go down and you just go and buy some puts, or you go short some futures, but you don't really have a system in place, you don't have any sort of risk management in place, and you're just kind of taking trades, it's not going to end well for you, because you might be right. You might be right a few times, but eventually that luck is going to run out. Okay? So how to forge discipline and get rid of impulsiveness? One of the most important things to do is to always have a plan in place. Why are you getting in? Ask yourself, why shouldn't I get in? There are times where everything will look perfect on this trade, and sometimes I'll sit there and say, okay, well, what's the reason why I shouldn't take this trade? Because I know for a fact that I'm not always right. I know that the market is always right. You are never going to win an argument that you have with price or with the market, right? The market is always right. So where's your stop? Where's your target? How are you going to manage your trade? Are you going to scale out? How are you going to manage your stop? Are you going to trail your stop? Are you going to base it on a chart? Are you going to base it on certain levels, dollar amounts, etc.? So my advice to everybody out there is no plan equals no trade. But also keep in mind, right? And I'll give you some examples or some analogies here. If you're fishing and you don't catch a fish every single time you cast your line, are you going to get upset? And if you're a surfer, do you get upset if you don't catch every single wave? So being an impulsive trader, falling victim to FOMO, right? Fear of missing out, that is something that it takes time to work on. And if you approach the markets the way you approach other things in life, right? So if you've never surfed, maybe you've gone fishing, maybe you've played a professional sport, maybe you've played a sport, right? If you take a shot when you're playing basketball with your friends and you miss the shot, are you going to quit the game? Probably not, right? It's the same thing with trading. So leave FOMO aside and learn to have what is called JOMO, the joy of missing out. Because remember that there's always going to be another trade. You can't physically take every single trade that comes up. So when you learn that there's always another trade, just like there's always going to be another fish in the ocean, it really changes the way you approach trading, because then you can start losing that sense of, I need to get in, I need to get that next trade. Oh my God, this trade is moving. That's fine. There's always going to be another trade. And it's something that took me years to finally realize and master, that now I will not chase a trade because I know that there's always another trade. The market's always going to be open tomorrow or the next day, right? So, how to grow yourself through trading? As I mentioned earlier, scaling up is a challenge that is unique to each trader, right? So, one thing that I suggest, and this is an old African proverb, do not test the depth of the water with both feet, right? Which means that if you're trying to scale up, you know, take it incrementally, right? Don't, if you're trading options contracts, for example, and you're used to trading one, then, go to two or, you know, scale up accordingly. But if you're trading one, don't jump to 10, right? Whether you're doing that with options contracts, whether you're doing that with futures contracts, grow yourself and grow your account, because the discipline here is the key. Without discipline, you likely won't make money. And even if you do, you likely won't keep it, right? Remember that the market is the great equalizer, and it will even take from your soul if you let it. I have seen people, we've all heard really terrible stories about people who, they do things and they go through a lot of things because they take large losses in their accounts, right? A classic example is Jesse Livermore, ended up taking his own life, right? And so, you want to always put yourself or keep yourself in a situation where you can always scale up when you're ready for it, because the market is always going to be there. But if you scale up too quickly, you're setting yourself up to fail. It's just like if you go to the gym and, the first week, the first month, okay, maybe now you can bench 100 pounds. But if you get to 100 pounds and the next day you say, okay, well, now I'm going to try 250, you're still not there. You're still not ready. Don't be in a hurry to try and grow your account size or to try and grow your trade size or your position size, because in some cases, especially when it comes to trading and building your trading muscles, sometimes slower is actually faster in the long run, if that makes sense. So if you can comfortably trade one contract and you're used to the swings with that, and now you want to start scaling up, well, if you're trading an ES contract or an NQ contract, trade some micros with some slightly larger size, right? So if, 10 micros is one regular NQ contract, then, start by trading 11 or 12 or 13, right? Because you can trade incrementally and grow yourself. You don't have to go from one contract to two. You can go from 1 to 1.5 if you convert that to micros, right? So just something to keep in mind. Don't test the depth of the water with both feet. So another question, right? Knowing when to walk away. And this is something that can be a real challenge for many. we have to learn how to get ourselves out of our own way, and that takes time and it takes effort. And to quote the late great Dr. Van Tharp, he says, if you don't have rules, everything you do is a mistake. So how do you know when to walk away? You have to set rules for yourself. It's very important, right? And so really when it comes to rules, you don't have them, you don't follow them, or they quote unquote suck and they need to be modified. The only way to know is to actually have them and to apply them. So tracking and reviewing your trades to see if there's an issue with you or with your system is very important. And that will help you to know when to walk away, right? Because if you're on a losing streak, but you're not following and tracking your trades and reviewing them and journaling, how are you going to know where you're going wrong, right? So as part of your trade plan, you need to have some of these things in there, right? So having a daily loss limit, a weekly loss limit, an X number of trades in a row loss limit. Same thing should apply for your gains, right? I know you'll hear a lot of people say, well, you should keep trading when you're trading well. And I agree with that. But if you've been on a really good trading streak and you let that euphoria start taking over, that's when you're going to end up taking a contract that's, taking too many contracts, taking too large of a position size if you're trading options or common stocks, maybe not putting your stop where you should, just becoming overall reckless and irresponsible with your trading because now you start to feel invincible. You feel that you know exactly what the market's going to do because you've had a few trades in a row where you've won. Very dangerous. Okay. It's very, very dangerous. So always have something in place so that you know when to walk away. Have that as part of your rules. Suggestions on staying focused, right? Um, Sometimes the best thing to do is to actually trade, to scale down and to trade less. Now, this, of course, is easier said than done. So ask yourself how important trading is to you and how much being successful matters. So how would you stay focused and how would you stay on track or stay on task? Having a plan in place, following your rules. Of course, that's going to help. If you can't do it on your own, because many of us trade by themselves, or sorry, by ourselves, find somebody as an accountability partner. Find a mentor, right? Because if you don't have somebody who's there to help you through the process, trading can be very lonely and you don't need to suffer in silence because I know there's a lot of traders out there in a lot of different groups or a lot of different communities that their trading is not going well for them, but they don't know who to reach out to, or they feel ashamed that, okay, I've lost money on my trade or I'm not trading well. It is possible to turn your trading around. You just have to put in the time and the effort, right? If you're going to drive from New York to Los Angeles, you wouldn't just hop in the car and start driving. But many of us do the same things when we're trading. So make sure that you have a plan in place. Make sure that you have your trading rules. Make sure you're tracking your trades, journaling your trades, you know, writing down what's going on with you, what's going on in your life, what's going on with your career. Because if you're not in a proper state of mind to trade, it's not going to solve any of your other non-trading issues. And all of those emotions are going to start coming out when you're trying to trade, right? And that's when you can really damage your account. I know I've seen other people do it. It's happened to me myself, right? So if you're not in a proper state of mind, it's okay to just not trade. So tips for learning discipline, right? As I mentioned, trying to automate things as much as possible. So entering a bracket order, letting the market do what it's supposed to do, but you also need to understand your time frame, okay? If you're trading a daily setup, you have no business watching the 5-minute chart all day. If your setup is based off of a daily signal, watching the 5-minute chart or the 3-minute chart or the 15-minute chart, it's not going to do anything for you. It's not going to give you any additional benefit, and you're going to start to get in your own head, right? Because if you're watching a 5-minute chart and you have 3, 4, 5, 6, 7, 8 candles in a row and they're going against you, you might start to panic, but you might not even be close to your stop based off of your daily chart setup and your plan for that trade. So then you end up doing what? You end up panic selling only to see the trade reverse and end up going in your direction. It's happened to us as traders. So get yourself out of your own way. Focus on the time frame that you're looking at because learning the discipline is very, very, very important. It's not something that you can learn overnight. It's something that takes time and takes effort.
There is one question in the chat. How do you make your way out of drawdown when you take consecutive losses?
So that for me is um, when I find myself taking consecutive losses, what I will often do is just take a break and I'll go back and I'll look at why I'm taking those losses. Is it because I was not taking proper setups? Was I trying to front run the market? Was I putting my opinion in the market? And then oftentimes I find that from doing my trade review, it will give me some insight into why I'm taking those losses. But I also understand that, if you win 60, 70% of the time, you're still going to lose 30 to 40% of the time. And so if I've taken 3, 4 trades in a row, then, it might not be me. It might just be the actual market conditions where, um, you know, you just have to let your edge play out because there are going to be situations where you're going to take trades. Remember, over 1,000 trades, it's almost a guarantee that you are going to take 5 to 10 losses in a row. So, how do we manage that? First of all, we have to properly position size, right? When we start trying to double down and trying to trade bigger size to recover our losses, revenge trading, right? Impulse trading, all of these things lead us into more and more trouble. So, what I would suggest is go back, review your trades, see the reason why you're taking these losses. If it's an issue with yourself, then that's something that you need to figure out. If it's an issue with your system, if it's an issue with your trade management, could even be an issue with your broker, right? TradeEvade had issues for how many times over the last little while? These things happen, but you need to first and foremost understand why those losses are occurring. If you don't have rules, then you need to have some. And if you find yourself continuously taking losses, then you need to determine whether it's your system or whether it's yourself. And I know it's not that easy because, you know, when we when we trade, a lot of our internal emotions and things that we have going on in our subconscious, things that, we were raised to believe as children, a whole lot of these things, it they all start to come out, right? And so you don't want to be working through all of your life issues when you're trying to trade. So what I can tell you is that, it does take time and effort. Um, you know, Market conditions, strategies, you and your life factors, they all really matter, right? And so if you're in a drawdown, it could just be that, it's part of the actual trading journey, right? Over 1,000 trades, you're going to take 5, 7, 10 losses in a row. But also you need to realize that, okay, you know what? There could also be other factors. And that's where we need to look at ourselves and be very honest with ourselves or have an accountability partner or a mentor or somebody who, you talk to about your trading. There is no shame in reaching out for help when it comes to trading or even in life. Okay. Now, hopefully that answers your question. So, do you need 10,000 hours to be successful? I'll tell you this, right? Trading takes time. You're not going to become a bazillionaire overnight, right? It's not going to happen in a year or two. It might never happen, but you can learn to become a consistently profitable trader. But what I will tell you is this, and it's going to sound counterintuitive, so bear with me for a second as I explain this. Our primary focus as traders is not to make money. Our primary focus as traders is to be the best traders we can possibly be. The money is a byproduct. If you are trading well, if you're planning your trades, if you're executing on your edge, you're properly position sizing, you're protecting your capital, you're paying yourself from the market as funds become available to you, then you can, you know, proceed to become a profitable trader, and you can survive as a trader and live to trade another day. But it's not something that's going to happen overnight, and it's not something that's easy, right? There's a lot of people that made money post pandemic when the market was pretty much going up. Now that the market's choppy, what has changed? So ask yourself, is your system suitable for all market conditions? Are you suited for market conditions, right? Sometimes no trade can be the best trade. So you don't have to trade all day, every day. Find something that works for you and stick to it, right? So people had asked, what books do I read? What do I suggest? So here's a few of them that I highly, highly, highly recommend, right? So Trading in the Zone. If you're a trader, you absolutely have to read Trading in the Zone. You are doing yourself a disservice if you don't read Trading in the Zone, okay? Atomic Habits by James Clear. Mastering the Trade by John Carter. Discipline Equals Freedom and the Dichotomy of Leadership, by Jocko Willink. The Hour Between Dog and Wolf by John Coates. Reminiscences of a Stock Operator. And Can't Hurt Me by David Goggins. Okay, I highly recommend all of these for a wide variety of reasons. Zen Trader is also good. Yes, yeah. And these books are all available on Audible, which I prefer. Right? If you can't sit there and read for a couple hours at a time, or if you fall asleep on the sofa when you're trying to read, Audible's a great way. You could be out for a walk, you could be on the train ride into the office, whatever the case might be. Just an easy way to put it on and to listen. You can get through material fairly quickly. So managing trades, right? This is something that people had asked about as well. So this is always a challenge because there is no right way to trade, but there are a lot of wrong ways to trade, right? So impulse trading, not tracking and reviewing your trades, oversizing, etc. Always do what's best for you and your account. So, think of it this way. What is measured can be improved upon. If you don't know what you're doing wrong, how can you fix it, right? So track and journal your trades, put in the work, and this way you will be able to determine what trading style works best for you, your personality, your schedule, what's going on with your life, right? If you're a really busy person and you can't watch the markets all day, then you probably don't want to be looking to take day trades off of a 5-minute chart, right? But if you're on a computer all day and you have access to the markets, then maybe if it's suitable for you and that's something that works for you based on you and your situation, your position size and your account size, etc., then that's something that you might consider. But it's really important to figure that out, right? And the best way to figure that out is to try these different things. But don't go in with a huge amount of money because, if you're not ready, you could end up losing that. So start small and build your way up, right? So here's, right, next slide. Do I need a lot of money to trade? Honest answer is depends. You don't have to have 50K to start trading. Even if you have that much, I don't suggest with you that you trade with that to start. There are a lot of people out there who, I've done one-on-one consultations with. They're like, okay, I have this much. I'm like, all right, well, trade with $1,000 to start off with, because many of us want to grow our accounts to 6 figures, 7 figures, and then take out a whole bunch of money. You think, okay, well, if I get to 100K, then I'm going to take out 50K. Well, why not just take money out along the way? Or, you think that if you get to 6 figures or 7 figures, that's the key to your success as a trader. Some traders, and I was one of them for some time, struggled when my account balance got to a certain point. So an easy way to overcome that, especially if you're trading for a living, is to pay yourself, right? If you can grow your 10K account to 25K and then withdraw that money and reset yourself back to 10K and do that over and over and over again, whether it's in a week, a month, a year, whatever the case might be, it will help you to build confidence, right? Because that is a huge part of trading, is having the confidence to execute on your trades, knowing that you have an edge, that one thing is more likely probable to happen than something else. So I just wanted to show you guys this because I think a lot of us get caught up with, trying to grow your account quickly. And I see these $1,000 account challenges often on the, in the FinTwit space. Because, the whole idea is, okay, if I can just keep doubling my account, I can go from 1,000 to 1,000,000 in no time. Well, there are some challenges when it comes to this, right? First and foremost, this assumes that you can make 100% return on each trade, and you can repeat that same success 10 times in a row. Well, you run into another issue. Comes with position sizing. Because, okay, sure, you can go from 1 to 2, maybe 2 to 4, 4 to 8. But if you're at 16K in your account, are you really going to put in 100% of your account to try and double it to 32? Or if you're at 64, are you going to put 100% of your account in to try and double it again? You're also going to run into issues with, depending on what you're trading. If you're trading futures, okay, sure, you could probably get filled on X number of lots. Well, what if you're trading options? What if you're trading stock, right? And so these are things that we need to keep in mind. Sure, it is theoretically possible that you can double your account a bunch of times and end up with 1,000,000, but what's the probability of that happening, right? So when you see these figures thrown out on FinTwit, be very careful because even at an ambitious 1% per day, right? If all you did was make 1% on your account every single day, in 232 days, you could get to 10K, 463 days to 100K, 695 to 1,000,000, 926 to 10 million. And in just under 1,160 days, you could get to $100 million. And all you have to do is just make a simple 1% per day. Well, if that was the case and everybody was actually able to do it, just imagine how big everybody's account sizes would be, especially when you see 10% a day, 100% a day, right? We have to be realistic. And so when you look at the trading journey, there's approximately 250 trading days in a year. So if you make 10 bucks a day on average, you'll make 2,500 bucks a year. It's not bad, right? If you make 100 bucks a day, that's 25K a year. Now, 25K a year is not small money. Now, if you make, just under $500 a day on average, you're looking at about 6 figures a year. When you see individuals who are reporting, 10, 15, 20, 50K days, are they doing that on a regular basis? Keep that in mind because it's very easy to Photoshop. It's very easy to show paper trading results. It's very easy to have, 15 different accounts where you're putting on fake trades and then just show the trades that you're winning on, right? So keep this in mind when you see these returns on FinTwit. Somebody like Warren Buffett averaging what, 20 something percent a year. Jim Simons, the best guy who's ever done it, right? They say he solved the market, owner of Renaissance Technologies. He's done like 60 something percent a year and has compounded that over many years. So keep in mind that small amounts can add up, right? If you can make $100 and you do that 10 times, well, then you've got $1,000. Now, if you repeat that process 10 more times, now you've got 10 grand, right? So remember, base hits will pay the bills, okay? So the financial markets give us unlimited potential to live the life that many dream of. But remember that trading is a marathon, it's not a sprint. You won't make it on one trade, but over a series of trades. So don't just think about one trade. Start thinking in terms of the next 1,000 trades. And keep in mind that taking losses is the cost of doing business. It will happen. You just need to make sure that you're not taking losses that will wipe you out, right? So remember, over 1,000 trades, it's very possible that you're going to take 5, 7, even 10 losses in a row. So think of your trading capital as your oxygen tank if you're a scuba diver, right? If you run out, it's game over. So always position size responsibly. You would be surprised how much better you could trade if you cut your position size in half. Believe me, the vast majority of traders out there who are struggling, if they just reduce their position size and took half of the size that they were doing, right? So if you're trading one NQ contract, start trading micros. There's nothing wrong with that. There's no prize for trading the NQ. You want to make money, you want to be consistent. So trade something that is going to work for you and put things in your favor, right? So make sure that you learn and you understand what you're doing, right? Being self-sufficient is the most important thing as a trader. If you're out there and you're just copying alerts, then what's going to happen when those alerts aren't available, right? How many groups or companies have shut down and just left people high and dry over the years? So, you know, you talk to myself, you talk to T-Trades, we're all going to tell you the same thing. It's that we want people to be completely self-sufficient, right? The reason why we put this content out is because we want people to be able to learn and to be able to do things on their own. But you have to put in the time and you have to put in the effort, right? So realize that it's a marathon and not a sprint. You're probably not going to become a millionaire on your next trade, right? There's always going to be another trade. You can't take every single trade that's out there. And remember that proper planning prevents poor performance, right? And so if you have a repeatable process, you can have predictable outcomes. And if you treat it like a hobby, it's going to pay you like a hobby. And most of our hobbies cost us money. But if you treat it like a business, it can pay you like a business, which means that it could be profitable. But you need to know what you're doing. You need to have that time and that effort and that skin in the game and realize that it's a process, right? I once worked with a lady who was a medical doctor who was trying to learn how to trade. And she told me that becoming a trader was more difficult than medical school. So don't think that the success is just going to happen overnight because it's going to take time, it's going to take effort. But you have to believe in yourself and that you can be successful. It's one of the hardest things that you can do because it's not just you versus you, it's you versus the market, it's you versus all of the other traders out there. But if you surround yourself with people who genuinely want you to succeed and are willing to teach, then you'll be much better off. Remember that you also have to be teachable, right? I've been in this game for many years and I'm still learning. I will still take notes if somebody else is presenting and I have an aha moment, right? You will never learn everything there is to learn in the markets. Everybody, doesn't matter how long you've been in the markets, how much you know, how much money you have, how many credentials you have, everybody is always a student of the market. So every edge that you can give yourself is another tool for you in your trading toolbox, right? And to end off, I will quote Henry Ford, and he says, if you think you can or you think you can't, either way, you're right. So thank you all very much. I really appreciate you taking the time to listen to what I have to say. I really do hope that you found it beneficial, and I wish you all nothing but peace and blessings. And, I wish you all to be very profitable traders. Just remember to put in the time and put in the effort. And if you need help, ask.
And
Take care,
real quick,
everyone.
Real quick before we go, you did mention some one-on-one sessions, so if someone was interested in that, how would they reach out to you?
So you can go to the website statalerts.com and you can book a session through there. So I believe the website, my Twitter handle and the website are both in the description of the video.
Perfect. Well, thank you for coming on, and thanks everyone for joining in, and we will see you guys all later. So have a great rest of your night. See ya.
Thank you, everyone. Bye for now.